Good morning. My name is Thomas Lopez-Pierre, and I'm the fund manager for the Urban Real Estate Fund, LLC. Our website is urbanrealestatefund.com. We are a social impact private equity real estate fund that raises capital from accredited investors, and we deploy that capital with Black real estate entrepreneurs. For more information, visit us at urbanrealestate.com. All right, we got the commercial out of the way. Let's begin. So I want to thank our public members for attending this investor meeting, and I want to thank my investors, and I want to thank our entrepreneurs. This is the end of the year. We had a very successful year, and I want to go over some notes. As you know, we do our private investor meeting in the first quarter of the new year, and I didn't want to wait that long because there's some action plans that I need participation from. So I want to give people early notice and also discuss, there have been some fundamental changes to the fund. So I want to discuss that also. All right, so first up, we're the Urban Real Estate Fund now. And we changed the name from BREF Fund I, LLC. The decision for that was, how can I say this politically correct? Our Black Wall Street friends who have not invested in large number as of yet, basically said that we're too Black. Too Black. And that we need to be more DEI and more diversity and we need to raise money if we're going to provide capital for Black real estate entrepreneurs. And so I had to find a balance on the name and on how we source our capital. So moving forward in the new year, we will continue to be 100% Black owned. We will only accept equity capital from Black people because our mission is to economically empower build wealth in the Black community. But we're going to accept debt capital in the same way we would accept capital from a mortgage bank from all racial groups. I get an average of 3 to 5 phone calls from Black entrepreneurs looking for capital. And unfortunately, we can't source them because we are not raising the kind of money that we need to raise. And so we need to have a conversation about that. And so moving forward, the way the investment structure will work is we will continue to give our equity investors 15% preferred rate of return if they invest under $100,000. If you invest more than $100,000, you'll get a 20% rate of return or 50% of the profits, whichever is greater. Now for our debt investors, they will receive a 15% interest rates annually. So let's say they invest $10,000. Every January, they will get 15% on their money, prorated. So if they invest in January, they get a full 1 year, they get $1,500. If they invest in the middle of the year, they'll get $750. But every January, we will make our bond payments, our debt payments to our debt investors. And that's the brand we want to build. And the goal is we want to raise, several $1 million doing that. Then take that capital and use that to invest with our entrepreneurs, or then our entrepreneurs then invest in our projects and they give us back a 50% return. So any questions about the name change and the capital structure from anybody? Okay. I want to get our entrepreneurs on and off because some of them have some issues this morning. 2 of them have water issues. So let's do Daphne first. Daphne, you there? Oh, wait a minute. Before we do Daphne, you there?
Yeah, I'm here. I'm just waiting for the doctor to come back in the room.
Okay, stand by. Derek.
Yeah, I'd probably be better in about 5 minutes if we want to do somebody else, but yeah.
Okay, cool. I'll take care of that. Daphne, let's start with you. Give us an update on your project. Oh, let me give some context. We, about a year ago, almost a year ago, it'll be a year, no, it'll be 2 years in May. We invested first $50,000 and then we increased it to $100,000 with Daphne in as a line of credit. She's working on a number of projects, and I believe one with the Land Bank of Philadelphia. And we are we're pleased with our interaction so far. We look forward to her first payment. And so Daphne, run with it.
So the first, hello everyone. I'm sorry for the condition that I'm not on the camera, but I had an emergency this morning with my son. So the fund had invested in my projects. The first one was at a property, single family duplex home in Southwest Philadelphia. Um, so that you invested $50,000. I just had the house reappraised. The house is now valued at $415,000, which I will be pulling money out of that to pay back the fund. The second project was money towards another single family project in Southwest Philadelphia. I was doing that with a partner. That one has stalled, but we're trying to sell that property currently. And then the third property that the fund is vested in is with the land bank that is in a multifamily 3 apartment unit, which we were finally approved for that project. So we're now in the process of finding construction people, teams that can help with the building, as far as developing the building. We already received zoning for that building. So we're moving along slowly, but we're moving along. Um, so that's basically where your money has been invested. We are greatly happy that you invested in our property, in our projects, and so we're looking back to giving back money, hopefully, in before May, because I did refinance the house 2 days ago on Thursday.
Okay. So let's see, we have questions. Marcus, what's the questions in the chat?
Oh, it was me. I just asked 2 questions. I asked one was stalled, and just trying to get some more description and characterization thereof. And then the other one was I couldn't get off mute before I was putting my daughter to sleep. But Thomas, it was for you in terms of understanding, and we can revisit it at the end if there's folks pressed for time, but more of the cap structure in terms of the funds and any liquidation preferences, and how things are structured from a debt and equity perspective, as far as on the upside, which I think you described, but didn't necessarily describe the other extreme on the downside end, and what things look like if things need to unwind.
Absolutely. Daphne, answer the question, and then I'll get to the rest.
I believe your question is on how 6134, that project was stalled. Is that correct?
Yes.
Yeah, that's right.
Okay, so that project, I was doing that project with a partner. It was not managed properly. There was a lot of hiccups dealing with zoning with LNI. So we had to revisit how to make those corrections. And then there was money that we did not have to make the project go further. Did I
Yeah.
answer?
So is that project dead then, or is stalled to just slowed but going to continue moving forward? But the description that you provided seems a little bit different. That's why I was trying to figure out the definition of stalled.
The project is basically dead. I had the partner basically took money from the project that I invested into the project and spent it somewhere else. And I did not find that out until towards the end. So, and then we weren't meeting deadlines with LNI. LNI is in Philadelphia where they come into your property to make sure everything is structured properly, everything is up to code, and there was a lot of hiccups dealing with plumbing issues. So right now we're trying
Thanks.
to sell the property to recoup the money out of that property.
Thanks, I appreciate it. Sorry.
That's okay.
Any other questions? Okay, so entrepreneurs go through challenges, and that is expected. And so my primary focus is protecting the capital of our investors. And Daphne has provided collateral to ensure our investment return. The property that she's talking about in terms of refinancing is her mother's property. The fund owns 50% of her mother's house, which has increased in value from by how much?
It was originally appraised at 300 and I think 350. Now it's at 415 from the appraisal that I received on Thursday. So now the bank is going forward to allow me to pull money out of it from the equity out of the project. Since I did a lot of updates in the property recently, updated the main bathroom, I put in a lodging facility in the second unit apartment, put in security cameras, updated the security cameras, redid the basement. So I did a lot of updates in the property.
Right. So even though the line of credit we gave Daphne, she used it on a number of projects, and even though she's having challenges in a number of her projects, the fund is protected because we have a 50% ownership position on a property. What's the mortgage on the property?
The mortgage currently right now is 252.
252, and the appraised value is 415 that the bank is giving her. So the fund capital is quite secure, and we're confident that this is going to be an excellent opportunity for us. At some point, she'll be returning the $100,000 with, and the $50,000 payment is due before May. Do you intend to keep the 100, or you intend to cash us out, or you don't really know right now?
I really don't know. Most likely I will be moving that money over to the land bank because the way we're moving, we're looking at construction teams right now currently. So if anyone knows anyone, please send that resume over to us, their CV, and we'll be happy to look it over. But we're currently right now looking for a construction team.
Okay, so this speaks to the mission and the values of the fund. It's rare that you see Black women participating in the development space. Usually they're on the sales side. And so we were very excited about Daphne coming to us and us being, well, not us, I mean, you, the investors, providing the capital, because I'm just a broker in a sense. All I do is raise the money and pass it on. So it's really you, the investors, who are providing this Black woman with the opportunity to participate in the generational wealth opportunities that exist in Philadelphia. And so,
yeah, but Thomas, what's the relationship that either we or you have in terms of some of the assistance that Daphne, in this particular instance, needs in terms of, it sounds like she's looking for, which I can't help, right? I'm a lowly doctor, so I don't know anything about the area or the subsector per se, but it seems like she would benefit from, I think she mentioned some construction and things of this nature. Is that you helping? Is that something that we need to sort of network? Would that be helpful if we tried to do that? Like it'd be interesting to know moving forward if there are things that we can be doing.
You hear me?
Oh.
Thank you.
yeah. So somebody's on video. You're
So I think you probably got the gist of the question there.
yeah. Okay. So no, I totally understand. No, that's not our job. The great thing about the land bank is it's a government private partnership. So Bethany was mentioning that. She was mentioning it more from the sense of that our purpose is to help provide Black people with jobs. jobs and opportunities. So if you know somebody in Philadelphia that is a small contractor and would be willing to her, but the land bank will provide her with a number of construction people to pick from. They're not going to let her fail. So we don't have to play an active role.
No, you're correct. They do give us a list. I was looking for someone of a minority standpoint. They do give us a list where we can go and pick and choose. But it's not a lot of certified in Philadelphia who can handle new construction, and who also has the time. So if you know someone that can help, that's African American, minority, then I would love to partner up with them. If not, then we're going to go with the list that we were provided. I wanted to keep it, us helping
Sure.
each other.
Very good. Michael, did I get that help? Did that help with the understanding?
Yeah, it did. I just didn't know if there are to-dos that we should be taking, which I'm happy to take. Again, wouldn't be able to do it myself, but friends, contacts, etc. Happy to reach out. Happy to scan the network and get some assistance if even if there was a short write-up that I could forward along to folks in the area that I know in the sector who could be more helpful than I.
Excellent. Excellent. Yes. So just for our listeners, our investors come from all over the country, but we invest from Washington, D.C. to Boston, Massachusetts. And the reason for that is because we want to stay on the Amtrak line, because I need to visit the properties and I don't want to build up our expenses, but with hotels and airfare. Are there any more questions for Daphne? Because I know she has a family matter I want her to rush to. Anything else on for Daphne? Any other questions? All right, let me just
Thanks.
You're welcome.
And let me just add that the opportunity that we were able to invest with Daphne is real and it's critical. Daphne had a chance to buy the property next door to her mother's house. And unfortunately, she didn't know of our existence until late, and the contract had expired. But we could have helped her buy the house right next door, because the house that she has, her mother's house, is a semi-attached, and she could have gotten the whole property if only we had been aware of each other. And so there are a lot of missed opportunities for Black entrepreneurs, and we really need more capital to provide it. And Daphne's providing a 50% return on our money. In 1 year, we invested $100,000. She'll be returning $50,000. We're on the deed, not as a lien. We own 50% of her mother's house. And if we're forced, we will sell our ownership interest to protect investors' money. But the great thing is that our entrepreneurs are motivated. And so we don't feel we'll be in a position to have to do that, at least not with Daphne. Daphne, anything you want to add before you go?
No, thank you, but I really have to go. The doctor's in with my son with the band. So thank you.
Very good. Be well.
Bye-bye.
All right. Tony, you there?
Yes, I'm here.
Okay. Hey, Tony. Tony was our last project. After we do Tony, we're going to do Ascari. Because I don't know if Stephen is here. Okay. Okay, so Tony is a former Pennsylvania state legislator who is doing a student housing deal in Camden, New Jersey. Tony, tell us about the deal. We invested $100,000 with Tony. Same terms as the other entrepreneurs, 50% return within 1 year. So Tony, go tell us about. Oh, Marcus, do me a favor, throw the video up of Tony's project, and keep it on mute, and he can just talk over it.
Gotcha. So where we're at with the project is tinkering with the unit count, and right now I'm in, I guess I would describe the phase of going through the, aligning the capital stack in coordination with the New Jersey Economic Development Agency. That'll take me, I guess, over the next 60 days. I'll put the package together, get that finance, and then I will once that financing package happens, I will then, cash out of the funds dollars. But, the unit count may go up by 2, may shrink by 2. We're sort of figuring that out in the design right now. It's really a matter of where we the best place to put the mechanicals, and, going through some studies there, and, looking to go up another story if possible. But that's kind of in consultation with the neighborhood.
Very good. Let me just add that when you look at the video, you'll see that there's a cafe there. Just in terms of the capital structure and with regard to our investment, Tony owns 100% of that cafe. If you look at the video now, you see the other side. He wanted to buy all that. And it's a large block area. It's like one whole square block, and he's building, I don't know, 30 something units of student housing right across the street from Rutgers University. And so Tony provided, because there's no debt on the property, we agreed to take an equity position in the project property itself, because there's no mortgage debt, so it's very little risk to us. We own 50% of a property that's worth, how much is the property worth, Tony? Currently, just the cafe.
About 450.
Okay, about 400. So we're in for 100 plus 50,000, and that property has about $400,000 in value. So we believe this was a good investment on behalf of investors, and we expect to get cashed out earlier than the 1 year. And so, Tony, when did you say the CDFI was going to cash out?
So that's going to take me like another 60 days to kind of put together the capital stack there, and line up the credit facility to do the construction.
Okay. Well, we're very pleased. This is an opportunity that.
And my apologies if I'm not clear. I'm in the basement dealing with a water leak.
No. That you and Daphne both had water issues with piping. Any questions before we let Tony go? Marcus, take the video off. All right, Tony, thank you for giving us this update. Thank you for your time today. Any last thoughts on your part?
No, I appreciate the help of the fund.
Great. We look forward to doing another deal with you in the future.
Absolutely.
All right, Tony. Be well. All right. Oscar, you're coming up next. Let me just check something. Let's see. All right. I think we got women in real estate joining as a public attendee, and just wanted to give you a shout out, because we very much give a priority to investing with Black women. So if you know any Black women looking for $100,000 in equity capital, please have them reach out to us. We're very much interested in doing deals, as I said, in the Northeast. Oscar, are you there?
Yes. Good morning. Can you hear me well?
Very good, very good. So this is our second deal with Ascari. Ascari is a former head of the Securities and Exchange Commission Atlanta office, and he is a CPA, and he carries an MBA, and he's a brother willing to get his hands dirty. So he's in development. Marcus, do me a favor, put up the first project that Ascari did when the one where I'm with Larry, so we can see what the property looked like, and then I want to go to the second video where we can see the progress of the property. But Ascari with his business partner Larry Thomas, they've done two. This is their second deal with us. The first deal is oh, and for people, LinkedIn profiles have been put in the chat. But this is our second deal. And we did one deal with them in Massachusetts. And now this is our deal in Long Island, New York. So Marcus, fast forward it so we can just go right inside the house. And where there's been some challenges, and so we're going to hear about that. But let's first I just want to get the view of us inside the house. Okay, so Larry, Ascari, what did you acquire this house for?
Yes, we purchased the house approximately about $495 back in 2023.
Okay. All right, Marcus, go to the new price and take it from here, Ascari. Tell us what you've done.
Yes, thanks for the time, Thomas. So good afternoon, everyone. We purchased this property in Levittown, New York. It's a city out in Long Island, and it's a city that was a little bit restrictive of giving African-American opportunities to participate in that city to build, construct new homes, or even renovation properties, right? But times have changed, and we had an opportunity to acquire this property and really build some strong relationships with the city, got some good partners from an engineer, architect perspective. And basically we bought this house. It was a 3-2 single family, no basement. And we converted it to a 5-4, right? And we added a basement. And basically it's a corner lot. And we were successful in executing based on the plans that we had. However, we did have some challenges with the city and the county and with a couple neighbors, right, who felt like the property was a little bit too much on their line, but we got that investigated and we came out on the right side of that. So that was positive. Second was just working through the city, and given that we were new in that area, we had to provide more documentation, evidence of our work. And, we got through relatively slow, but we got to the end goal, right? So where we at today, we got into that project at about $495, all in acquisition plus construction, approximately $1.1 million. We got a sale under contract right now at currently $1.350. We had a previous buyer 6 weeks ago at our listed price. That fell through because of our error by our attorney, and the buyer walked. So we had to go back on the market down our list, and we got a buyer to actually, give us an offer that we accept. But we took a lesser amount because we just want to exit. But at the end of the day, there's sufficient equity and profits to provide the fund its interest. And we're excited to say we have an estimated closing date of January 15, 2025. And we are excited that we have an opportunity to be aligned with the fund, which is return investors capital, which is the fund, but most importantly, providing returns. And we align with that to protect investors capital. And we appreciate the patience and support that the fund has provided along with its investors.
So we have some questions in the chat. Michael wanted to know the problem with the lawyer and what made the first buyer walk away.
Yeah, that's a great question. So I'll tell you the short story. We had 3 buyers. One came in at 1,340. The second buyer gave us our listed price at 1,399. Then we had another buyer at 1.45. Just through the vetting, we said the second buyer had a contingency and said, you know what, we're going to give you listing price, but we got to sell our house first. The third buyer, who was given an offer of 1.45, we did good vetting, good research. The other buyer said, and other real estate agents said, they're pretty sound. They're good buyers. They're well, liquidity to purchase. We went with that because of the higher value, right? But guess what? We lost on that. The buyer went ghost. They never returned our calls. They never even got back to us. So now when we came back to the second buyer who wanted to give us the listed price, the attorney failed to change the 1.45 on the contract, send it over to the buyer, and then he said, wow, you guys were really marketing this to other folks. Now you sent us the wrong contract, so now we're going to exit. So the lawyer had a fat finger. He didn't look at the contract before he sent it out, and the buyer left. So we had to go back down our list to really find another buyer, for which we did, to get us to this 3.50 exit. But at the end of the day, it was a silly mistake. We tried to raise a challenge to find a way how we could get compensated by the lawyer for that error, but we fell short on that. So just to get out, and based on the commitments that we have, we're just going to take a haircut and come out at 1.350.
Very good. Mike, did that answer, Mike? Okay. So number of things I want. So, there's a saying in politics, you never want them to see how they make the sausage and how they make laws. And it's also the same thing with regard to real estate development. There are just some things that are done. It's a multi-faceted, multi-part, multi-dependent. And the reality is most of these entrepreneurs or even large development companies, they're not able to finish on time. It's almost like in war, the war plan is perfect until the first shot is fired, and then you see reality. And so, Marcus, take this video off. And so the delays have been problematic for us as a fund. Their schedule payment, Marcus, you took it off? Oh,
yeah, also Clayton has a question.
Okay, let me finish up first, and then we'll go to Clayton. Thank you. And so their schedule was to pay the $50,000 on October 11th. But liquidity is always an issue for these entrepreneurs because they're putting all their cash into the project, so they can't make any payments on anything until they sell. So that was fine for us. However, the collateral that they were using, they've decided that they couldn't carry it any longer, so they gave it back to the bank. And so now that left us without collateral on this investment with regard to, this was about 6 months ago. So I told them they had until the end of the year to provide us additional collateral, or we would have to sell their contract. And so the end of the year is in a couple of days. And so I'm basically, in a couple of days, I'm going to sell their contract to BREF Fund, BREF Debt Capital LLC, which is another group of debt investors that I'm the fund manager of. And so I'm going to be selling Ascari's contract to them for $161,000, which is the amount of money that would be owed by the end of the year that Ascari would have to pay us. Because he missed the October 11th deadline, his month to month is $4,100 a month. So if you multiply that by 2 months and some days, it comes out to $161. When he makes the payment, when he sells the house and he makes the payment, and he pays the whatever, if he chooses to cash out the whole $161,000 60 something, or if he just makes the investment payment, he'll make that payable to the debt fund. And then if he provides the additional collateral, I will buy back his contract into the equity fund from the debt fund. Now, currently, the only collateral on his investment is his partner, Larry Thomas's brother, put up his personal home. And so there's a lien on his personal home for $100,000 at a 12% interest rate. The debt investors are getting paid a 10% interest rate. So they're overjoyed that they're going to be earning 50% now, which is why it was so easy for them to agree to buy Ascari's contract. Now, some might say, well, Thomas, why would you sell the contract if you're confident it's going to get paid? Two reasons. One is we cannot carry, it is my belief with regard to our risk management protocols, that we cannot carry an asset on our books that is not collateralized. That is something that is used in our marketing to our investors. We tell them that when we invest with an entrepreneur, we make sure that we have significant collateral. And the payment is in default once it hits the 3-month part. And so we had a lack of collateral and a default. But we have an entrepreneur who has an outstanding reputation with regard to making following through on his projects. And so if we had more time in the year, I would just let it ride. But unfortunately for Ascari, there are internal issues within the fund's structure that have little to no, that have no fault of his own. I made a commitment at the beginning of the year that the fund would be net asset positive. And so, which I achieved, and we'll discuss that in a moment when we discuss the financials, but I could not carry his investment on our books and achieve net positive asset, net positive asset. And so in English, it meant that we would be at a financial loss carrying it. I mean, it would be made up the next year, but I wanted to report that this year that we are in the black. And so I had to move him off our books. You can call it financial engineering, because in effect, that's what it is. But I expect to take him back on our books once he provides the required collateral. Clayton, you wanted to jump in, and then if anybody else wants to chime in, please let me know. Oh, wait a minute, before you chime in, do me a favor, Marcus, can you let Robin back in? She must have came off and came back on. So, and let Clayton in, because he's also, so let him in, because he has this, let him in as a panelist. Okay, Clayton, once you're in, you can give your question. There you go. All right, Clayton, so the floor is yours.
Hey guys, yeah, Ascari.
Hey, Clayton.
So a couple of questions. Did we pay any attorney's fees to this attorney?
No, we don't. No. I mean, no. That's so. If that's the both of us, the fund doesn't pay attorney fees. So anytime we do a deal with an entrepreneur, the entrepreneur has to pay our legal fees. Now, Ascari, you can answer the question.
No, we that was the settlement that we came that we're not going to pay him for that error.
Good.
Yeah.
Okay, good. And then I guess I probably should know this, but I'm just thinking ahead. I suspect we don't have any recourse, but for the first buyer that fell through, would any consideration would have been placed, like, I don't know, earnest money down or anything, as part of the, well, maybe the better question, was there an actual, I guess they would place an offer, you guys would have had you guys accepted the offer. Was that just all verbal, or like there's like a contractual piece? Just wondering if we were able to get something from that.
Yeah, so we sent over the preliminary acceptance offer to them through their broker or through their agent, but the agent didn't even hear from them, basically. So nothing was signed. So there wasn't really any recourse that we could have taken. But
Got it.
yeah, it was a tough situation because, to be honest with you, if their second buyer didn't have the contingency, we probably would have gone with that second buyer. But the contingency was so unknown, we could have been sitting for 60 days and there wasn't any time. So we had to pivot, basically, you know.
And I think the last question for me, I mean, aside from the fat finger from the attorney, which I guess is I don't, could that be, I guess, two-part question. One, could that have been avoided? I mean, meaning that, you know, you guys could have caught the error on your side?
Yeah.
And or what were the lessons learned from this exercise?
No, the lesson learned is what you said first, that we will probably review the contracts before they actually go out to the buyers, right? But you know, we trust the attorneys and the agent that we hire, that they will do their due diligence. But they didn't, and he just sent it over to the buyer, and the buyer wasn't too pleased, right? So lesson learned is we're gonna be more involved and review the contracts before they go out. That's our key takeaway on that. That wasn't a good that was not a good experience, I can tell you that, because we would have been out of the project, sold by now, basically. Right. So we're a little very upset because we that put us in a position that we could not deliver for the fund, and that was not a very good place to be.
Got it. Thanks.
Very good. Any other questions? Okay, so just to recap, the plan is that once Ascari sells the property, wait, let me not make assumptions. Ascari, do you intend to use the $100,000 again or cash us out?
No, we will use it again. Yes, thanks.
Well, not cash us out, because we in a couple of days we won't own that contract anymore, but cash out the debt fund. Right. Okay. So
yes.
So you'll I believe the payment will be 65,000 something. You'll make a $65,000 payment next month, and then the contract for $100,000 will be acquired on credit equity fund, and then 1 year later you'll make another payment of $50,000, hopefully on time, and then we'll just go from there.
Yes.
Assuming
yes.
also that you provide the secondary property for collateral, because we don't do liens. We made an exception to do a lien for you because you were one of the entrepreneurs that started with us in the beginning, but we won't be doing that again. And so, yeah, so we're good. It's, these matters take time, and at the end of the day, it's really, I think Warren Buffett said, you could put anything you want in writing, but doing a bad deal with somebody who's a bad person is, no good, no matter how good the deal is, it's not going to work out. But when you're dealing with someone such as yourself who has integrity and who is been communicative and straightforward with the challenges of doing development, and the last thing I want to say is that I don't want people to be lost on the fact that, you're doing development in Levinson, New York. I mean, that's a part of Long Island where, I don't know if many of you have read the book, The Color of Law, but there were deeds where Black people on the deeds you couldn't sell to Black people. That was on the deed. And there are still deeds that are on the books that are no longer enforceable that say you can't sell to Black people because that's how long the properties have been in those families. So this is, be doing a development deal in that community with Black money and a Black developer is a point in history in America that, that we should be embracing. So We wish you luck, and you made your, on the first deal you did with us, you paid us, and we were happy, and so we look forward to get paid again. And unfortunately, we had to sell the contract, but we look forward to taking you right back. Any other questions from anybody before we let Scary go?
So, sorry, Thomas, one final question. This is probably less for Scary, but more for you from a fund standpoint. So is there any, as it relates to this specific deal, all the books and records and P&L has already been captured today? Is that accurate?
No, I did a draft financial just so that people could have a general understanding of where we are financially. I'm sure there'll be some bills that'll come in from the plumber, or we're doing the development of 3129 Fenton Avenue. And so I'm sure there's going to be some bills, minor, 500 here, 1,000 there coming in. So the numbers will get better. I mean, the debt will pile up a little bit, but it's basically what you see now is basically what's going to be reported in first quarter of next year.
Got it. Okay. Thanks.
And Michael, I'm going to answer your question in a moment when I get to Fenton Avenue and the whole capital structure. Anything else for Scary? All right, Scary.
Yeah.
I know you flew, so leave when you like. Scary's also an investor in the fund, and so we're glad to have him as an investor. Derek.
Yes, how you doing?
Hey, Derek. Hey, everybody. I wanted people to, this is our in-house real estate lawyer, Derek Warner, out of Brooklyn, New York. We have 3 deals in New York, and he's been helping us manage them. And I just wanted everybody to meet Derek and to have Derek say a few words, and then he's with family, has to run off.
Yes, how you doing? Happy holidays, everyone. Yeah, handle a lot of the funds business vis-a-vis New York City courts, legal system, helping them to deal with landlord-tenant issues if that's the problem at a property, or for financing. Sorry about the background noise. Yeah, so mortgage and also recording deeds and mortgages in the New York City area.
Very good. Marcus, do me a favor, bring up 3129 Fenton Avenue. Can I have you for 2 more minutes, Derek?
Sure.
Okay. Marcus, let me know when the video is up and running on Fenton Avenue. So let me just give a quick Fenton. So to our attendees, because our investors are pretty much aware of this. But when we invest in a property, as I said, we always take collateral. And an entrepreneur, we invested in this property here, and the entrepreneur, the issue wasn't over. The issue wasn't over non-payment. It was over deed fraud. He had put this property as collateral on another loan, and that was a violation of our agreement. And so we basically went to negotiations with him. The property was in pre-foreclosure before we invested. So we agreed to take ownership of the property, pay off the $139,000 in mortgage arrears. And then we invested $205,000 in renovations to prepare this 2-family for Section 8 tenants. And Derek was, I don't know, he was just, let me just say, there are, and I have respect for lawyers. There are corporate lawyers who are really good at pushing paper, and they are the best paper pushers that you want when you're doing a high finance deal. But Derek does business in Brooklyn, New York, primarily, and that is a knife fight. and sometimes you have to use a gun. And Derek knows all the dirty little tricks that they try to use against Black people to take their property. And he has just been an invaluable asset to ensure that this property stayed in the hands of Black people, and particularly the fund. So I'm very appreciative of him doing and following. We've had to threaten lawsuits. Derek prepared a lawsuit to file that was going to be filed the next day because the hard money lender was trying to take the property from us. And so we like I said, you don't in politics, you don't want to see how they make the laws, or you don't want to see how they make sausage. And in real estate, you don't want to have to see how Black people have to keep and fight to control their communities. And Derek was critical. So I just wanted to give him recognition for that, for his efforts here.
Thank you, Thomas.
Any last words for anybody? Any questions that people have for Derek? All right. We are on this property. Oh, to give you when Ascari didn't pay the capital that was required, I made the decision not to pay the mortgage for, I think, about 5 months. I think we owe about 5 months on this mortgage. And so we will be paying the mortgage on the arrears in next month. We're expecting capital from a number of sources. Marcus, do me a favor, come on camera and give people an update on the renting of this property. You can take the video off.
Hi, I'm Marcus
Wait, let me wait,
Lopez-Pierre.
hold on a second. Marcus, hold on. So everybody, this is my son, Marcus. He's the fund's deputy fund manager. He's a political science major at City College. His plan is to become a securities lawyer. He scored a 1500 SAT when he entered college. And he is a licensed real estate agent. And he represents a number of the fund's investors as their agent to rent their properties. And very proud of the work he reviews the financial statement that we went over, and he found a mistake that I made. So the numbers are $2,000 wrong, because I should have went back to high school and take addition, and my son found it, and which is why I'm glad I paid for that private school education that he received in high school. Anyway, Marcus, take it over. Oh, one last thing. He's 19 years old. He's single with no children. And so if anybody has any really great daughters that they like to see get married one day, my son would make an excellent, excellent husband. I think he and my ex-wife and I would agree that he would be an excellent husband in the future. Go ahead, Marcus, now that I've embarrassed you.
Well, starting in the summer, I began looking for potential tenants for 3129 Fenton Avenue. And I eventually settled on looking for one with a housing voucher, as those provide guaranteed rents from the government that are above market rate. We currently have a prospective tenant, and who has signed the lease herself. It's a single woman with 3 children. The rent is
wait, Marcus, don't talk anymore about the familial issues of the tenant. We have to protect our privacy. Okay, go ahead.
The rent is going to be at $3,910 per month, and we are in the last steps of finalizing the lease, and so we believe by February 1st, the lease will be signed. The tenant will move in and will begin generating income.
Yeah, one of the problems that we're having is my fault. When I changed the name of the fund, I did not change the name of the fund on the deed. So the city is like, you got 2 different corporate names, so that has to be rectified. And so the lease signing was delayed because of me. I should have changed the name after we signed the lease with the tenant, but I didn't think that through, and so it delayed things by a month. So it's my fault that the city hasn't executed to start the payment as of yet. But we expect all this to be resolved and the tenant will be moving on the 1st of February. Anything else you want to add about this, Marcus?
No.
Okay. Very good. Okay, so now I want to, okay, Marcus, you can come off. You know, when you're doing a Zoom and you get a text from somebody, so that's good. Anyway, Michael, you brought up a good point about the capital stack and the structure on the downside. So we're a fund, we're borrowing money, or we plan to borrow money. And if for any reason we date its assets to meet its debt holders' obligations. So if, you know, if we borrow X amount of dollars and we don't pay, I'll be forced to sell Fenton Avenue or sell the contracts that we have with entrepreneurs to liquidate for cash to pay our debt holders, because they get paid first. And the fund's reputation must continue to be sterling with regard to meeting our obligations. So the debt investors there would be a forced liquidity event in regard to a failure to pay. Marcus, do me a favor. Do you have the document with the table for the debt tape investment table?
Yes.
Any questions for anybody with regard to Michael's question? Do me a favor. Put up the debt table. Any questions from anybody so far? All right, so starting in January, we're going to start accepting debt capital from all racial groups. And this is an example of a case where, let's say we borrow, an investor comes and just writes a check for $100,000, which is normal. We've had 2 investors write checks of $100,000 in support of the fund. So let's just start it from the top. Marcus, why don't you start the investment table off and go over it? And then if there's any questions, people just jump in.
All right. Starting at the very beginning, so with $100,000 in principal.
So hold on a second. So that's $100,000 that, you know, John Smith invested in the fund, and we've taken that $100,000 and now we're going to invest it. Go ahead, Marcus.
And with the fund's 50% rate of return, we produce $50,000 in operating income, and removing the 15% interest rate on that principal as debt service, we're left with $35,000 in investment income for year end 1. Then in year 2, we have that same $100,000, but also $35,000 in equity, which we do not need to pay interest on as we've produced it for ourselves. That together is $135,000 that is invested with a 50% rate of return, producing $67,500 in operating income, and subtracting the $15,000 in debt service leaves us with $52,500 in investment income at year end 2. Then year 3, our $100,000 in principal plus now $87,500 in equity is together $187,500. Is at a 50% rate of return is at $93,750 in operating income, and subtracting $15,000 in debt service leaves us with $78,750 in investment income at year end 3. altogether, the our total investment income over the 3 years is $166,250, and that is after returning the $100,000 in principal, after having paid 3 years of debt service, which is together $145,000.
Very good. Any questions from anybody?
Yeah, like I said, I think in first of all, Marcus, this is a great job, and thanks for going through it. I think it's very well presented. My point earlier, just to tie the bow on it, is to understand the economics here, not in the what I'd call the happy path here, which Marcus just really went through quite well. It's on the down path, right? Where we're not seeing the economics and what the contingencies are when we're in that downside scenario and what that looks like for both debt investors and equity investors in terms of the
Great.
squeeze and the value destruction, et cetera. And maybe that's coming, but that's what I was trying to.
Right. Okay. So Clayton, I see you. After I answer this, Michael gets his follow-up. We'll go to Clayton. If anybody else has any questions, just click the hand raise thing. So the operating agreement restricts me to raising only 80% of our asset base. That means that if the fund is worth $1 million, I can only borrow up to 80% of the fund's value. I can't, like a lot of hedge funds they will borrow 10 times 100 times their equity, which is why hedge funds, when they're successful, they do so well. But when they're not successful, where we've seen, Marcus, what's the name of that movie with the GameStop situation with that billionaire lost like $1 billion a day because he,
Dumb money.
Dumb money. Was that it? Okay. Where he lost $1 billion because he put a short on GameStop and it went bad for him. So I don't get to borrow 10 times, 100 times the value of the fund. I'm restricted to 80 times. So, you know, the fund is currently valued at $1 million in equity and debt. I'm sorry, $595,000 in equity received from investors, and then there's the appreciation. So I'm probably limited to buy probably $300,000, $400,000 a year in debt that I can carry from investors. Now, when I invest that $400,000, you know, in 4 entrepreneurs, 1 year later, that $400,000 is created 35,000 times 4. So now that enables me to borrow more debt. So every year that goes by, Marcus, you could take the debt table off the screen. Every year that goes by, I'm able to increase my debt facility by the amount of equity that I'm building in the fund. And if as I said earlier, if for some reason our entrepreneurs are not paying us and we're not raising new equity, then there will be a liquidity event. I will be forced to sell assets to meet our debt obligations to our debt investors, which the equity investors, and also equity investors can lose their principal if I go shopping like a drunken sailor and just borrow too much debt, which I'm not going to do. And so, and you know, at the end of the day, this comes down to the fund manager's risk tolerance. I like risk. I embrace risk. I will tell you, if someone came to me and said, Thomas, I have this building, there are 10 units in it. There are 10 doctors that live in the building. They all pay their rent, not on time, but they all pay it 5 days early. The building is 100% new construction, so there's very little maintenance issues. Would you like to invest? And I would be like, oh God, no, thank you. I have no interest in that. Because that investment is going to produce a coupon. Because it's so safe and secure, that person's not going to have any problem raising capital to refinance. And so there's going to be a competition among people to participate in that deal because it's nice and safe. And there are certain financial institutions that, like pension funds and banks and senior citizens that need a monthly payment that are looking for a safe investment. But I'm not investing for people's today retirement. I'm investing so that, for instance, there are a number of doctors and lawyers on this call. I'm investing for your retirement. This fund is a 10-year fund. There are no distributions over. And for our attendees, I want you to be aware, there are no monthly distributions. The fund, once I get your money, I get to keep it for 10 years. And I invest it, and I'm not even taking a management fee, which I'm going to talk about. I'm deferring my management fee. But the idea is to have it compound, and compound so that we can generate significant returns. I am looking to create a fund that is one of the best returns out there, so that I can use that to launch a Reg A+ offering for up to $75 million and do YouTube ads and LinkedIn ads, so that I can use that as a track record. So really, this is a test case. So I'm looking for really well-managed investments that will produce high alpha returns for our investors. So Michael, did that help?
Yeah, it did.
Okay. Clayton, your turn.
I kind of semi forgot what my question was, but I think
Clayton's an investment banker, and he doesn't forget questions.
No,
on
I think
deals.
so. It's two. Almost.
And by the way,
Yeah, so
Joseph,
I think
two.
Yeah, so I think two. One is I guess a question / comment, and the other one is a real question. So I think going back to Marcus's table, if you could pull it up, Marcus, I think one of the things that's assumed in that I guess scenario analysis of the returns is that the rate of return is captured within a year, right? And based upon, I think, experience so far, we've had holdings of well over a year. In fact, I think it's some maybe even close to 2 years. So, I just
No. It's only been, the longest has been 6 months before we refinanced.
So all have been within a year?
Well, no. Some people paid, and other people we let them refinance, meaning we let them roll it over.
So, but when did we? So, what does that mean? Like when we say refinance, what does that mean?
It means that
Like
what it means is, like, great example of Stephen, and I wish Stephen was on this call, but his property in Brooklyn has gone from 900,000 to 1.2 million, and so he's, Con Ed hasn't turned the lights on at his property because they're working on the whole block, and it's delayed his development. And because of the increased value of the property, I said, yeah, you don't have to pay us the 50,000. It's just increase, our balance will now be 150, and then in another year you'll owe us $75,000 instead of 50,000. And so and the same thing with Daphne. Daphne went from 50,000, and then she owed us 25,000 after a year, but then she got the land bank deal. So then we gave her an additional 25,000 plus the 25,000 payment she was supposed to make, plus the $50,000 in principal, brought her to 100,000, which is why she's paying us $50,000 next year. So those are rollovers. But when someone pays late, the max has been 6 months.
Okay.
But okay. I'm sorry, I think what you were saying, which is the point you were trying to make, was that how are we going to make these interest payments if our entrepreneurs have a history of paying over a year, correct?
Basically, and I think it I think the table shows like a best case scenario, and maybe this was what Michael was kind of suggesting. Given what we know about the industry and delays and what have you, I mean, this isn't it may deviate from reality. I guess that's my point. So,
No, I think your
I guess
question.
where does I was going was that I would like to see, I guess the holding period from start to finish between when it is funds were paid out from the fund to the period where the cash was actually received from the investor, and or have those scenarios of the refis that you mentioned. I would like to see that sketched out somewhere. I don't know if we have that somewhere. I don't think so, but I think it would be helpful to help us keep ourselves honest in terms of the timeline, because time value of money is real, right? So I certainly want us to look at those numbers and see what it shows so far. And maybe we could use that as a feedback loop to help improve some of the fundamentals in terms of how we do business, and how we do business with our investors as a go forward basis. So that was kind of like my comment / question. I think separate from that
Wait,
is,
listen, Clayton, I have ADH, so let me answer that part before you go into something else.
okay.
So first, excellent point. And I had not thought of that, which is why I'm so, I work very hard, extremely hard to build an investor base. And if you notice that our investors are lawyers, doctors, investment bankers, and contractors, electricians, we don't have school teachers, social workers, and as investors. And because that would put me in a position of being more knowledgeable in most cases. So I work very hard to be the dumbest guy in the room. And I'm very proud that based on the 38 investors that we have, I've achieved that status of being the dumbest guy in the room. So I'm grateful for the input that I've been receiving from investors to make this a better fund. Now, to answer your question, I did not think of doing that. And so when we issue our annual report in the first quarter of next year, I'm going to put together a schedule that shows when the investor received the capital and when the investor actually paid the capital. And within that also when the investor, if the investor rolled over the capital into an additional year. And you're right, I think that is a great information point to provide us better context on how we're doing in regard to managing our relationships with our entrepreneurs.
Okay, awesome. I look forward to seeing that. And then I think that the second thing was, as kind of BAU, do all I don't know if investors is the right word, but everybody who we partner with, in other words, who we finance or give equity or debt, whatever the source of capital is, are they investors to the fund? And if not, then kind of related to prior points.
When we start, yeah, let me, this whole process is a learning experience. I thought it would be great if the entrepreneurs were also invested in the fund this way. That would give them, but I've come to realize that it's too much conflict of interest. And so Tony, who was the last deal we did, he is not an investor in the fund, and I'm not accepting any more entrepreneurs as investors in the fund because first, some of them are not accredited investors, so I can't take them. That's number one. And number two, I believe moving forward that I'm going to have to be more of an asshole than I thought I was going to have to be in the beginning. And I would prefer that these entrepreneurs not have direct access to my investor base where they can make calls for me as I sell off their mama's home to protect my investors. So no, moving forward, we will not be accepting any more entrepreneurs as investors. Now, an investor in the fund can end up becoming an entrepreneur, so I'm not opposed to that. If we'll present that to the investment committee, and if they sign off on it, I'll support it. But yeah, we won't be taking any more equity from entrepreneurs into the fund.
Got it. Okay. Makes sense. Thank you.
Any other questions? Marcus, bring up the financials. Any other questions from anybody? to 50% of the profits. We're capped at we're capped at a 50% return on our investment. Did you get it, Marcus? Oh, one there goes. Marcus, pull it up. Okay, so yeah, make that. So if everybody would look. So this is Blackstone did a really good job at discussing the evolution of a private equity fund and its structure. Marcus, I want to see the second page because that's the one that shows the curve. Look for the second photo. Yeah, that right there. Okay, everybody, that's the J curve. So it's usually by year 4, the fund becomes profitable. And the first 3 years, 4 years, the fund, with any fund, loses money because of the money is spent on marketing, regulatory affairs, legal, accounting. So funds do not start off traditionally day 1 profitable. So this is a major occurrence for us that we're now profitable after 3.5 years. And so not to pat myself on the back, this is a major step for us because I believe moving forward, we're going to see some really successful returns. And we won't have to put any major amount of money into any of our own property. Remember, we've put about $300,000 into Fenton Avenue between renovations and debt service on the mortgage. Now we have no more obligation to service the debt and provide a small profit, we believe, that we then can use to pay down the debt on that property that we owe people like Clayton. The mortgage we're going to keep, but the property that's owed Clayton, the debt owed Clayton, and we owe Nasir for the acquisition of the remaining 25% of the equity in that property. We believe that we'll be able to accomplish these things with rental income and equity from new investors. So our debt profile is going to be significantly reduced on the debt that's not performing, and the debt that will be performing will be the debt that we're going to be collecting next year and investing with entrepreneurs. So I want to get ready to wrap up in the next 2 minutes. Marcus, do me a favor, drop those photos in the chat so if people want to take them and look at them. And let me see if I can pull up the link from those photos. And let me see if I have the link so that I can share that. Did I put the link? Yes, I did. Okay, Marcus, put this link to Blackstone in the chat so if people want to look at this document easier. I'm going to send it to you right now on LinkedIn. All right, there we go. So I sent it to you. Use that link and share that with people on the call. So if you want to look at that. So yeah, this is a major occurrence for us to be now profitable in the black. And we could not have gotten here without the trust of our investors in my leadership and management of the fund. This has been a team sport. We got here because of active participation among our investors. Like I said, I worked very hard to be the dumbest guy in the room. While I've been a licensed real estate broker for over 10 years, there are a lot of management issues that I had to learn. And I'm really grateful for the generosity of knowledge that many of you have provided in helping us get to where we are. Because I am crazy. I do believe that we Black people can work together to build wealth and create jobs and not be subjected to the ghetto nonsense of mismanagement of capital. Marcus, is it up? So before we get ready to wrap up in the next 2 minutes, is there anybody here that has, oh, Joseph. Joseph, can you come online?
Hi, Thomas.
I can't see you. You there? Where's your face? Let me see your face.
1 second.
Marcus, do me a favor, take the Blackstone thing off. There we go. Marcus, is Joseph being recorded?
Yes,
So you took the Blackstone thing off?
yes.
Okay, good. Joseph.
Hi.
Hi. Everybody, Joseph is one of the reasons he's a contractor and an investor in the fund. And he's one of the reasons why we were able to get Fenton Avenue to pass our inspection from the city's Section 8 unit. And so he was at the property. I mean, he literally was going to sleep overnight to get the boiler up and running, to get the items that the city required to be fixed, resolved. And he actually, if you feel his hands are rough. And he did not hesitate a minute to get his hands dirty. And so I want to publicly thank him for helping us get Fenton Avenue, because now we're going to be earning $3,910 a month in guaranteed Section 8 payments. So bravo. And Marcus, do me a favor, put his LinkedIn profile. Oh, you're not on LinkedIn. God, what is your problem in LinkedIn, man? Anyway, share a few words.
Hi, good afternoon. Happy holidays to everyone. It's been a pleasure working with Thomas and the fund. I've actually learned a lot. Of course, my background is in construction, and being involved in the fund, it has somewhat opened my eyes to certain things as far as investment to a certain degree, at least from that standpoint. I've flipped properties in the past, but it's nothing. There's a difference between what Thomas is doing versus what the experience I've had in the past. And it's been, I must say, fruitful. And I'm happy the way, at least, and the responsibility he's taken in the fund. Obviously, from my background and his, I had to school him sometimes, and he as hard-headed as he could be sometimes, but he is surrounded himself by persons, obviously, that has been able to get him to get the job done, and I appreciate that.
No, listen. I'm just confused many times working with Joseph why a boiler, just because it's missing a few parts, can't get up and running for a city inspection. And and he's got all these issues about gas will leak, and these just it's just been a challenge getting Joseph to understand that the city's coming and I need the boiler working. And he's got these minor issues about gas leaks, and anyway, we've worked it out. So I'm sure it's been a joy for Joseph to work with me, but I have to admit it's been a challenge for him to get to understand that my investors need this apartment rented, and we've had to work through those things. So thank you, Joseph.
Welcome. I'm happy to be a part of the fund and looking forward to getting more stuff done.
Very good. And if you guys look on any of the financials, and what's the name of your company?
J&J Management.
Yeah. So you'll see payments made to him. I can assure you he's under bidding and not giving us fair market value, because he believes in the commitment to the fund. And he's done some work himself so that he can save money for the fund. But he will not be doing this for other people. So I encourage you to hire him, and he will charge you market rate.
Thank you, Thomas.
Thank you, Joseph. Any other comments? Michael Chiyuki, can you come on? Are you there?
I'm here, but it would be difficult to come on camera.
Why, you have your son in your hand? It's okay. I know you're a good daddy.
Got to balance a lot of things.
And listen, I just want to listen. Michael has been a big help in terms of crafting some of the business ideas. He's a lazy Nigerian because he only has 2 degrees, one in a JD from Howard and a master's in public health. So he's not what you would call a very accomplished, but he has great common sense, and he's been a critical advisor to the fund in terms of developing our strategic plans. And I'm just really grateful that his wife lets him participate, because, many times he's washing dishes and changing diapers. And, he's only, what, 30, you're 37, right? 37, 38?
Yeah, 38.
38, yeah. So as I said, my daughters would be honored to marry a man like you, who'd be a true partner in a marriage and a relationship. So I just wanted to give you that recognition, my Nigerian brother.
No comment as usual, but thank you, Thomas.
Anytime. Any last comments for anybody before we end in the next 30 seconds? I'm appreciative of all of you. And I'm grateful for your financial support. And we're going to accomplish great things. And for those that are interested in investing more capital, our attendees that are attending, please visit urbanrealestatefund.com for more information. urbanrealestatefund.com. We are committed to building wealth and creating jobs in the community, and we can't do it unless we increase the amount of capital being raised. I urge the lawyers and doctors and investment bankers and other professionals to let's come together like every other racial group. I just don't understand it. Black Americans, and I'm not talking about, it's so hard to work together. I want to work with you. We are committed to creating a fund that 20 years from now, your family will be saying, my family has been working with the Lopez-Pierre family, the Urban Real Estate Fund, for over 20 years. That's how I paid for our family to go to college, a retirement house, all these benefits, everything that all the white families get to enjoy. You can enjoy too if we just work together. There's an old, and I'll end with this, there's an old African adage or tale where if you want to go far, hey, Michael, I know you're African, but if you want to go far, go by yourself. If you want to go go together as a group. How's it go?
If you want to go fast, go by yourself. If you want to go far, go with others.
Exactly. Yes. And so let's please reach out to me. Let's work together. Let's build wealth in the community by investing with Black entrepreneurs. And if you're a Black woman looking for investment capital, you are a priority for us in 2025. And that's not charity on my part. Almost half of the capital we raise comes from Black women. We just had a Black woman, an investment banker, just invest $110,000 in the fund. Our minimum investment is $10,000. I look forward to working with all of you. This is Thomas Lopez-Pierre, Urban Real Estate Fund. I thank my son, Marcus Lopez-Pierre, for his hard work in getting us to where we are. And we did this together as a family. And I'm thankful to all of you. And again, urbanrealestatefund.com. Thomas Lopez-Pierre signing off. All the best.